Thanks for joining us at XM.com. I'm Christina Marujos, and you're watching the Daily Market Comment by Ref Boyajian. The U.S. dollar held on to its gains on Tuesday after surging yesterday on the back of rising Treasury yields. The yield on 2- and 5-year Treasury notes hit record lows on Friday as speculation grew that the Federal Reserve would take rates into negative territory after a rally in Fed fund futures signaled investors were pricing in negative rates for early 2021. But yields recovered yesterday as one Fed official after another pushed back on the idea of negative interest rates in the United States. The comments likely disappointed the White House, which has made clear its support of negative rates, but none more so than the President Donald Trump, who has long been arguing that countries with negative rates have an unfair advantage over the U.S., particularly when it comes to the exchange rate. Stocks were not having such a fun day as the Fed's pushback of negative rates reminded investors that there are limits as to how far the central bank is willing to go to support the American economy. However, a bigger factor weighing on stocks was the detection of new virus hotspots in China and South Korea and an increase in the virus reproduction rate in some countries like Germany, where the lockdown was recently eased. A re-escalation in new virus cases could jeopardize plans by governments to restart their economies and could also spell an end to the global recovery in stocks. But U.S. stock futures were mixed today, and it was a slow start to the day in Europe following declines in Asia. In FX markets, the dollar index was back above the 100 level as the euro and the pound continued to drift lower. The yen, however, managed to claw back some of yesterday's losses. The Reserve Bank of New Zealand is due to announce its latest policy decision early on Wednesday and will likely beef up its asset purchases, posing a potential downside risk for the Kiwi. Markets will be taking their cues from Fed policymakers as more of them will be taking the podium today. Their speeches will be seen as a precursor to Fed Chairman Jerome Powell's address tomorrow. This was today's Daily Market Comment at XM.com.